Are you aware of the huge rotation that is happening in the investment landscape due to the arrival of inflation? According to Schiff, most investors haven't looked beneath the surface of this market meltdown to realize the change that is taking place. He believes that the dynamics for investors have completely changed due to inflation, and pretty much everything that worked in the past won't work anymore. And despite the efforts of the Federal Reserve to prevent it, Schiff thinks that the air is coming out of the bubble, and there's no way to stop it from deflating. So in this video, we're going to reveal to you what American stockbroker Schiff warned about the economy that will probably save you thousands of dollars. Hey friends, welcome to Capitalista. Before we dive in, please take a moment to hit the like and subscribe buttons down below. Investors need to be aware that as the market bubble deflates, the strategies that worked during its inflation will no longer be effective. And despite the Federal Reserve's efforts to prevent it, the air will come out of the bubble. This means investors should adjust their investment strategies to adapt to their changing investment landscape. In addition, Peter thinks that the Fed's attempts to prop out the bubble will not be sustainable, and investors should not rely on them to maintain their investments. Did you know that inflation has been a problem for over a decade? The thing is, it hasn't affected the average consumer as much as it has the prices of assets like stocks and real estate. This is why the Federal Reserve and investors weren't too concerned about it in the past. The government used a metric called CPI to measure inflation, but it wasn't very accurate. It didn't reflect the actual increase in prices that people were experiencing. So even though the consumer prices did go up, it wasn't enough to cause alarm. Additionally, the government was able to disguise the true degree to which prices were rising with CPI. This allowed the Fed to continue creating inflation through quantitative easing and stimulus measures. The printed money flowed primarily into financial assets, which led to a record increase in US trade deficits. The trade deficit actually helped keep the lid on inflation to some extent. If the US didn't import so much, consumer prices would have increased even more. The government paid for all this imported stuff by printing more money, leading to even more inflation. The inflation problem we're facing now is largely a delayed consequence of the inflation produced before 2020, and it's likely to get worse, much worse. Schiff believes that the government has been hiding the true extent of inflation by using the CPI, which does not accurately reflect rising prices. According to Schiff, the government has kept inflation under 2% by manipulating the CPI, which understates how much prices are going up. This has allowed the Federal Reserve to continue creating inflation through quantitative easing and 0% interest rates, which has caused a record increase in US trade deficits. In addition, the government's ability to pretend that inflation was below 2% has given the Fed cover to create more inflation, primarily flowing into financial assets. However, Schiff argues that the inflation problem has been building for over a decade, and it is now becoming apparent as asset prices are falling and shortages are arising. Furthermore, the influx of money into financial assets also led to a significant rise in the US trade deficits. This means that the US imported more goods and services than it exported, substantially increasing the country's trade deficit. In fact, the trade deficit for the entire year of 2022 surpassed $1 trillion, which is an unprecedented figure for any nation. The US government kept inflation in check to a certain extent by dumping $1 trillion worth of goods into the US market, which helped keep consumer prices from rising too rapidly. However, this approach was not sustainable, and inflation continued to creep up despite these efforts. Schiff says that the government sent people money to buy goods and services they weren't producing. He believes this has caused big shortages, which shouldn't have come as a surprise. When people don't work, they don't produce goods and services, so the government sending them money to buy those things is counterproductive. The extra demand caused by this influx of cash into the economy has only made the problem worse. It's obvious that when supply is low, prices will go up, which is happening right now. Schiff thinks that the government should have contracted the money supply along with the economy, so demand would go down with supply, but they did the opposite. Inflation is not a temporary problem and will continue to rise. The Federal Reserve had claimed that the inflation would be temporary, but it is not. Schiff was among the few people to call out the Fed's lies about inflation. The inflation is likely to be much higher than it was during the supposed transitory period, which is a cause for concern. Peter says that the Fed is in a difficult situation with no easy out. They justified low interest rates and quantitative easing because there was no inflation. But now that inflation is tripled and 2% target, they can't justify the low interest rates anymore. Even if they raise the rates by 2%, it's still artificially low. The only reason for keeping rates low was to keep the huge debt bubble afloat. If rates were to normalize, it would cause a financial crisis worse than in 2008. The Fed is caught between a bad choice and a worse choice: fight inflation and let everything collapse, or continue creating inflation to avoid hyperinflation. Peter thinks that to protect against inflation, investors should get out of overpriced US stocks that don't make money and have high price to earnings ratio. He thinks they should go for underpriced foreign stocks that are undervalued and generate earnings and dividends. Additionally, he suggests hedging investments with gold and silver, which historically increase in value during inflationary periods. And by diversifying into these areas, investors can protect their portfolios from the negative effects of inflation and potentially benefit from the rise of undervalued assets. He further emphasizes the importance of stagflation proofing one's portfolio, as he believes that the current inflation problem could lead to an inflationary depression. Inflation could become hyperinflation, which could have catastrophic consequences for the economy. To prepare for this scenario, investors should consider diversifying their portfolios by investing in foreign equities, especially dividend-paying stocks. Peter Schiff advises that investors avoid tech stocks as they may not perform well in the current investment landscape. Instead, investors should focus on stocks with good fundamentals, generate earnings, and pay dividends. It's crucial to keep in mind that in an inflationary depression, the cost of living could rise to the point where people may not have any disposable income left for discretionary spending. This could lead to unemployment in sectors that rely on discretionary spending, making it even more important to have a diversified portfolio with investments that can withstand an inflationary depression. Therefore, investors should consider stagflation-proofing their portfolios by investing in various assets that can help them weather an inflationary storm, including foreign equities, dividend-paying stocks, and precious metals such as gold and silver. So do you agree with what Peter Schiff says about where to invest your money? Let us know what you think in the comment section down below. And that's it for this video. Make sure to show your appreciation by giving a thumbs up, subscribing to the channel, and turning on notifications. This way you'll be always in the loop and never miss out on any of our uploads. Until next time, and take care.